Crude oil WTI opened the week with a gap up with the news of production cut, and since then it has traded bearish and in fact has achieved higher lows at around $69 levels. Now once again a bearish week. What does this mean? Can we expect a break on the downside, or is it just consolidating here between 74 75 before looking forward to a breakout? Which position you should take trading crude oil WTI next week, we will see with the help of charts and indicators. And towards the end, I will give you the trading levels and strategy for next week. Do watch till the end. Do not forget to like, share, subscribe, and comment. Do not forget to press the bell icon, which keeps you updated with the twice a day targets which I share for crude oil. First with the Asia session, next with the US session. Both are equally important, as throughout the day it sets the tone for you to trade at critical levels for throughout the day with the Asia session and US session. So do watch that also. Also, you can get the live updates by joining our free Telegram channel. The link is mentioned in the channel and video description. Let's start. First, let's have a look at the weekly charts. On the charts, you'll find higher lows are seen, flat top is seen, 74 75 levels are getting crucial for oil to break past by. Previously it was 8485 levels, which is 82.6 and 8485 levels, which has given very good resistance for crude oil for multiple weeks. You can see multiple weeks it has just failed to break past those levels. Now this is happening with the 74 75 levels. At the same time, one important point to note is the support it is getting on the downside at 69 68 levels. It has got maximum support. So yes, next week if you see it trading below 68 again, yes, you can sell again, and this time it is going to get pulled down on the downside tilts towards 65 and below levels also. Now what has happened last week? Just look at this: higher lows, higher highs. So this is though it has got a pullback, but it is still a upward trending channel. You can see higher lows, higher highs. This is still an upward trending channel. And first of all, till the time 69.5 and 70 levels are respected, I will not consider oil as bearish for next week. And yes, if it breaks below 69.4 69.5 zone, you have to just stay short for 69 and 68. In fact, below 68 you can expect a further cross, further drop, and hence till 69.4 69.5 zone one has to remain extremely watchful, cautious. And then this zone at 69, which was the previous bottom, these levels you should definitely watch out for. At the same time, when you say higher lows, higher highs, it means any opening above 71 or a rise above 71, you can equally expect a pullback, because we have seen higher lows, higher highs. It can completely show a bullish engulfing here and can rise beyond 75 also. So this point also you should watch out for. Right now the tone is bearish, but at the same time we must note that it is not willing to break on the downside. Now let's have a look at the daily. See, on the daily chart the movement is pretty simple. This was the sharp drops in the retracement, drop, retracement, drop, retracement, drop. Very beautifully the movement is completely engulfed between this zone and largely between 75 and 65 levels. You can see this is the zone in which it is trying to trade. This is the larger zone, and on the near term 68 to 74 levels. Now these $6 are equally important for oil, as it is not willing to break on the upside and not willing to sustain on the downside. See, one break, second break on the downside, one break, second break on the upside. So equally good, plus minus $1. Yes, this is the range in which it is getting the maximum support, and it is trying to consolidate. Next point to note here is, first of all, see the rise here. Then this is a bullish flag. Still, if you look at the near term higher lows here, this is a bullish flag. Hence, any point of time next week, if it stays above 73 and then breaks past 74, consider that as a reversal. Consider that oil is reversed and it is going to fly. Now also let's just look at the last two trading candles. See, very small, very big wick on the upside. Prices failed to stay on the up. At the same time, the candle size, you can see the bears are not at all there. Very small body here. So it means that the bearishness has certainly. Now what could be expected here? See, lower highs. Once it stays above 71, you can expect a double top here at 72, and if it breaks beyond 72, you can expect further rise there, and then you can expect it to hit past 73.4 73.6 and then 74 levels. So right now still it is not to be termed as bearish till the time it respects here 69.4 level. This is very clear. It is still consolidating here. Higher lows, it is indicative that price is not willing to stay bearish. At the same time, a flag formation and hence a breakout can be considered equally bullish. Now look at the monthly charts. On the monthly chart, see, this is almost a year of bearishness in oil. It has almost completed the journey from where it has started the rally here. You can see these levels beautifully, these levels. Certainly, this is a zone from where the rally has started. It has achieved those levels. Now it is again trying to consolidate what it has you have seen here. It is trying to do it here also. Now also if you look at the previous two candles, lower highs, lower lows, increasing body size, increasing bearishness, that is one part to it. Next, what it has done right now, lower highs are done for the month, and hence if it breaks below this zone, now see what will happen if it breaks below 68, it can get a downward pull, lower lows, which means 64 levels, and below levels also can get achieved. If it draws below 68 and 64, you can say equally big candle size, because see, previous candle was a big bearish candle. The wick will be formed, and if it drops here on the downside below 64, you can expect that we might see oil hitting 60 levels also. There is a very good probability that this could also happen. But now let's have a look with the help of indicators. What does the indicators are suggesting? Now if you look at indicators, the moving averages are almost running flat and trying to converge here. See, the 20, 50, 100 are still trading very well placed one above other, indicating still bullishness. They have not yet crossed over. That is the first part. Second part is $60 levels. It has got very good support here from the 100 period average, and the 50 period average is now sitting at around 65, 66 zone. And yes, right now from the exponential moving average part, it is situated at around 50 to 100, and 100 period exponential average giving it a very good support. So a couple of points to note there. At the same time, if you look at the moving averages, simple moving average have started to converge. This is slightly a bearish sign on the monthly charts. Now if you look at directional movement, this is also crossed over. This is trading with slight bearishness. The stochastic has retraced a little, now trying to look down, and the now see MACD on the monthly charts, we have been tracing it for long now. Rise, retracement, this is the first wave. Rise, retracement, this is the second wave. Now this is trading in this bullish channel. So either this month, probably, and possibly this month still might remain sideways, but then it will try to again rise on the upside. It may try to consolidate here and let the red line follow it a bit, converge, crossover, and then bullishness may prevail. So this is first part to it. First bearish channel, second bearish move, and then the third will restart. It has almost achieved the bottom here, and hence possible consolidation here in this zone can be expected for a month of June. Now see, the red lines also have flattened here for last two candles, and now in fact trying to reduce. So this candle is going to remain important. As which direction it takes, we will see. More bearishness, chances are less that we may see increasing bearishness, but yes, we cannot deny it. Hence one has to remain very cautious and alert for $68 levels, then 65, 64 zone, and if it drops below more $4, you'll get till towards 60, remember, and then that should be the bottom for the month of June and for the near term. And on the monthly charts it can reverse from there. Possibility exists for this. Now let's have a look at the week. First, on the weekly chart, there is a crossover, the 20 and 50 period exponential moving average crossover, and the 20 and 50 period simple moving average is also crossed over. This is a bearish sign. Now 20 and 100 period have crossed over. This is again bearish, and 20 and 50 and 100 are also willing to cross over. Now it has got maximum resistance till towards $80 levels. That is the first part. You should be careful till towards 80, 83 levels. One has to remember this fact. Now 20 and 50 crossed over here. Simple moving averages are trying to converge a bit. I'll wait for it to cross over again in order to trade bullish. Right now it is still in the bearish zone. Also remember, on the weekly charts it traded outside Bollinger Bands and now trying to confine it within the Bollinger Bands. Directional movement bearish, it is divergent. Stochastic has dropped, trying to recover a bit. The MACD is almost at bottom. This is one sign which is indicating that there could be possibly a little rise, and now you can see this has happened after a long bearish move. Now see, first attempt of crossover, second attempt of crossover, third attempt of crossover, and now again it is just struggling to stay bullish, and these levels become increasingly important, and RSI is flat on the weekly charts. Now look at the day. On the daily charts, the Bollinger bandwidth has narrowed. Now also if you look at 20, 50, 100 period moving average, classically placed with a bearish tone, all the three moving parallel. This is a bearish sign for it, and this is also indication that till towards 75 it has got very good resistance. If you look at the directional movement is bearish, stochastic have dropped. MACD is trying to cross over for a sell. It is not yet crossed over, and see, this is still at a conservative levels. It is recovered a bit, but it's still not completely has turned to bullish. RSI has dropped. So now we have seen the charts, we have seen the indicators. Time for me to define the trading levels and strategy for next week. And before we proceed, if you want to learn this art of trading profitably, you should join my mentorship batch. 23rd batch starts on 1st of July. Limited intake we take. And just to keep the quality high, only limited seats are available. Reserve your seats. Now itself, it is purely available on the first come, first serve basis. Also, you can be part of my signals channel. We are trading as per the signals. Definitely, you can benefit. Again, reach out to me on the same IDs for more details. My Telegram and email, only the mention in the channel and video description. Now, first thing is where to. Now, see, you can buy here at 70.8, but very near 71. 71.6 and 72. Now once it stays above 72, we can see increasing bullishness beyond this, beyond 72, and then I will look forward to 73 levels. 73, 73.6 and 74. Till here it has got maximum resistance. Till 74 it has got great resistance, and if it stays above 74, just stay long. This time we can see it hitting, see, till 75, very nearby. Beyond that it will fly for 76.5, 78, and that's the journey for, that's the reversal for crude oil which we all are waiting for, and then it is going to fly up high post 80 levels. But till 74, 75, do not consider this as bullish. Hence, till here you have to trade with a trailing stop loss, such that in case of a reversal, your trade either closes in profit or at least put the stop loss at your entry price. Now, where to sell? I will only recommend you to sell at 69.8, a little far, but cannot afford you to enter higher. Only sell at 69.4, wait for 69.8, wait for 69.4. And if it draws below 69.4, that should be the beginning where you can expect 69, 68 levels to get achieved. And if it drops below 68, more bearishness is going to prevail. You can see it hitting 66 and 64 levels in the near term, and beyond that also further fall can be expected in the month of June. If it stays below 64, then and then only. So take your positions accordingly. Trade with the stop loss, trade with the trailing stop loss. Do not forget to like, share, subscribe and comment. Join my mentorship batch, join my signals channel. Reach out to me for any of your trading or training queries. My Telegram and email IDs are mentioned in the channel and video description. Thank you very much. Have a great profitable trading week ahead. Thank you.